Welcome to TikTok by Bloomberg's coverage of the closing bell. I'm Alex Gittleson here in New York, and I have Abigail Doolittle, our very own the Chartress, on the phone. Abigail, we just saw the biggest drop in stocks in 2 months. What's your take?
Yeah, this is a pretty interesting day here on this Friday, Alex. We opened lower by about 0.5% on the Dow, and at the lows, the Dow was down more than 3%. Off of those lows at this point, the Dow down about 2.2%, the S&P 500 down about 2%, and the NASDAQ down about an equal amount. So we're off the lows, but nonetheless a sell-off on pace for the first down day in 4, but similar to what we saw on Monday, because if you recall, Monday there was a big sell-off on fears around President Trump wanting to go after Amazon, and just the general fear reignited that there could be some sort of regulation of big tech and those big internet names. Then some relief around that on Tuesday, talk about a trade war on Wednesday. At the end of the day, we had relief. Thursday, we had a big rally as some White House officials were really playing down the possibility of a potential trade war. And then last night around 8 o'clock, President Trump urged some of his staff to consider $100 billion in tariffs against China. At that time, the S&P 500 futures plunged down about 1.6%. And then, of course, we had that disappointing payrolls report. So when you put it all together, investors just aren't able to handle it from a long position. The buyers really stepping away. And the sellers taking over on a near-term basis. And also going into the weekend, you probably have some nervous longs taking money off the table, considering that it doesn't seem to take much of a headline to whip these markets around up or down.
And I've been seeing senators from some of the major soybean-producing states in the Midwest are actually casting blame on the president for his aggressive actions against China. And the retaliation that could hit the farmers. What's your take?
Yeah, that's an interesting point. And actually, on Wednesday, there was lots of talk around the grains, soy and soybeans in particular, but actually China launched tariffs against corn and wheat, among other soft commodities. And it seems natural that politicians from the states most affected, if that were to really hurt demand, would be up in arms around this. But, something to point out about these potential tariffs, they are potential. They're proposed. There's nothing in, actuality happening at this point, but it's that overhang of uncertainty. So in the same way that those senators from those Midwestern states would be upset about the tariffs, we're seeing a similar reaction today around some of the industrial names really trading sharply lower. The worst sector for the S&P 500, the industrial sector, at the lows down, I think 3.3%, now down about 2.7%. Boeing, Caterpillar, Deere, lots of those big names, United Technologies, 3M, lots of the companies that could really be hurt potentially in terms of selling their equipment, and also the possibility of higher input costs. I think the general sense is, that a potential trade war clearly would not be good, especially between the world's two largest economies, for economic growth and for demand for those big companies. And we are on the close now, Alex, and at this time we do have the 3 major averages all down more than 2%, down about 2.2%. The Dow down a little bit more on that industrial weakness on the day, down 2.3%. And something I really like to point out here is going into today, because this is the first down day in 4, going into today, the major averages had been on pace for weekly gains. But now we are looking at weekly losses, and I believe we're looking at weekly losses that are greater than a 1.5% for each of the 1.5% for each of the major averages, and that stands out only from the standpoint that there's been so much volatility this year. Neither the buyers nor the sellers have truly taken control of it. But if we had had a weekly gain, it would have been the second up week in a row. It would have been a little bit of a feather in the cap for the buyers, but right now the sellers once again taking it. And you started off our chat here with my Twitter handle, the Chartress. I do love the charts, and today we once again had the S&P 500 at one point below that 200-day moving average, and that tells you that the long-term buyers are weakening. There are many on the street who will say buy the first test of the 200-day moving average. That happened back in February. Sell the next. The 200-day moving average has been some sort of quasi-support for the S&P 500 now for more than about 2 weeks, so that could potentially prove to be bearish.
It's Abigail Doolittle, folks. She does know the charts. Abigail, any insight in the week ahead before we let you go?
So I think it's probably going to be more of the same. Investors on edge in terms of what sort of unpredictable headlines could come out of either the White House or China for that matter. But plus, perhaps more important to the fundamental picture, we are upon the first quarter earnings season. So we've had a tremendous amount of weak trading action going into that first quarter. There are probably some wondering whether or not the strong earnings seasons that we've seen over the last few quarters can repeat themselves. We had at one point back in 2015, 2016, been in an earnings recession where growth dropped on a year-over-year basis, but more recently it's been very strong. So there's probably some expectation that the first quarter earnings season will be strong. One thing, going back to the charts typically lead the fundamentals because it's a picture of all of the information that the buyers and the sellers have at hand. And so, yes, you do have all of these headlines whipsawing the markets, but if all of the buyers and the sellers really thought that the earnings picture was going to be as strong as it has been, you'd probably see more buying action, more of that buying the dip action that we saw through plenty of dangerous headlines or exciting headlines, I should say, during 2017 when we did have buying the dip action when there were small dips, and we simply haven't seen that. That may suggest that perhaps this first quarter earnings season is not going to be quite as smooth as some of the other earnings seasons that we've seen more recently.
This has been TikTok by Bloomberg's coverage of the closing bell with Bloomberg TV's own Abigail Doolittle. Abigail, thank you so much. You can follow her on Twitter at @TheChartress, and as always, get all of your updates here at TikTok. I'm Alex Gittleson in New York. Abigail, thanks again.